We'll be joined by Dr. Mariya Pylypiv. She's the Chief Financial Officer. An AIRO Group is an aerospace and defense company operating through four segments: drones, avionics, training, and electric air mobility. Its offerings include Skywatch military drones, Aspen avionic flight displays, and GPS sensors, CDI military and professional training services for the U.S. and allies, and Jaunt-branded rotorcraft eVTOLs for cargo and passenger operations. AIRO has around 27.4 million shares outstanding for a market cap around 560 million, net cash of 40 million. Thanks for joining us.
Great. Can you hear us all right? All right, perfect. Let me kind of introduce who's with us. Dr. Mariya Pylypiv, she's our CFO. She has 2 masters and a PhD, and she got that all before 25, and she's worked in the investment banking industry and the hedge fund industry. Also joining us is Dan. He's our Senior Vice President of Marketing and International Relations. He's been with the company since the beginning. And myself, I'm the Executive Chairman. Used to be a doctor, then did my MBA out of Stanford. Our family has several publicly traded companies. So we'll tell you a little bit about AIRO. Maybe if we can jump to the next slide. So AIRO went public probably just over 2 months ago, so we're relatively new to the public markets. We're a growth-oriented air mobility, autonomy, and aerospace platform. We're into 4 segments. One is drones. We have UAVs that are used for military and commercial applications. We'll talk a little bit more about that. Avionics, we provide mission-critical electronic displays and systems. We were also one of the 8 awardees of the $5.7 billion contract to train the Air Force. So if you know the movie Top Gun or Maverick, we're the aggressor. We're also in electric air mobility. We're providing cargo and urban transportation systems and focusing on the cargo commercialization. To tell you a little bit about our financials, you can see in 2022, we had 17.1 million of revenues, and adjusted EBITDA, there was a loss of 14.7 million. And if you jump to our LTM as of June 30th, 2025, we have 99.8 million of revenues and 34.9 million of adjusted EBITDA. So you can see the company has grown significantly. If we jump to the next slide, you may know some of our brands. At Drone Services, we operate under the brand Skywatch, and our drone is the RQ-35 Hedron. We're one of the largest suppliers to the Ukrainian theater of conflict. I think we're the largest non-domestic supplier. Each drone can operate 500 missions. We have tens of thousands of hours. And we operate in a GPS-denied environment, and I believe we haven't had a drone shot down. We may have lost 1 or 2 to mechanical failures. So that business is growing significantly. In our electronic aircraft systems, you may know the brand Aspen Avionics. and we're in 14,000, small aircrafts in the U.S. And we just announced we're supplying the GPS to Joby, one of the eVTOL players. In military and commercial training, we talked a little bit about that. We provide closed air support, adversary air, battlefield targeting, and engagement. So that's, those are all very large TAMs. And then if you look at the eVTOL market, you may recognize our brand as Jaunt. We're focusing on cargo, but we provide the vertical lift of a helicopter and the flight stability of a fixed wing. And we're developing that through our Jaunt brand. If we jump to the next slide, I'm from Illinois, and Abraham Lincoln said it's better to be thought a fool than open up your mouth and be proven one. So I'm going to turn it over to Dan and Mariya.
Let me use yours. Thank you very much. Just a few recent announcements. I have to step down here because that one's too far away and I don't want to stand in front of here and get the reflection off my head for you. We've announced a few things over the last handful of months. Number one, as you'll learn through the course of this discussion, the biggest part of our business is actually in Denmark. So kind of can think of us as a European company. However, we are an American company. We are expanding our manufacturing into the United States and within the United States. So we have announced a plan to expand our manufacturing actually in Phoenix. We currently manufacture our avionics in Albuquerque, but we're expanding the drone manufacturing specifically in Phoenix. So, both our Denmark facility as well as the new one we're standing up now will be AS9100 certified. Our Albuquerque facility is also AS9100 certified. What that means and why that matters is because, and you'll learn about Aspen, we've been in business for 21 years, and we've certified, over 600 parts and systems for these aircraft. So we have a kind of a foothold and a pedigree of certification, and that goes from the factory level, all the way through the processes. So that AS9100 is a big deal. We've done a number of training contracts, as Dr. Couturier has talked about a little bit. In our training division, military training is really focused on close air support. We work with special forces across the U.S. Forces, all branches, and we do a lot of training for, as I said, close air support, adversary air. So we've done a lot there and put some news out about that. And last but not least, on recent news, we announced our middle mile cargo drone, so expanding and kind of combining two of our groups, both our electric air mobility as well as our drones, in looking at what's next in cargo transportation in drones. So we're combining our patented slowed rotor technology, which we'll get into in a little more detail perhaps today, with our pedigree of being in the drone market for a number of years. A 500-pound capacity drone that can, be operated not necessarily at airports, but really more from a hub to hub. So with Coyote Logistics, FedEx, DHL, those sort of customers. So that's another thing we've expanded into Mirabel. So we're also cutting the ribbon on a new facility in Quebec. So that's a big part of who we are, not only from where we're manufacturing, but also where we're undertaking certification is through Transport Canada for that. As we look at the global geopolitical landscape, I think many of you already know about NATO and what they're spending, and why does that matter to us? As we see the increase in NATO spending and the targets of 5%, we'll see really which country gets where. But that's a big deal for us. Is currently, over 80% of our business is done with NATO countries, and we sell directly to the NATO countries themselves. Much of which our products are put into conflict zones, some of which are used for homeland security, border patrol, and that sort of thing. So as some of the other companies also pointed out, obviously with a reduction in conflicts, we also see still an uptick in the use of drone technology, counter-drone technology, what have you, for the border protection. Speaking of the United States market, as we continue to expand the footprint of the RQ-35 Hydron ISR drone, this drone will be now brought into the United States. We've already been prototyping here at our new facility, building up the manufacturing capability here in the United States for a number of reasons. One of which, of course, is to be able to sell directly to the United States DoD. So, as our training division has large contracts, that we had mentioned one of them, this $5.7 billion IDIQ, that's just one of our contracts. Drones, we need to be able to manufacture that here to really sell in large quantities to the U.S. So we're standing that system up, or that manufacturing plant up for starters, and as I said, that'll mirror all the processes in our Denmark facility for AS9100 as well as the modular production line that we have. Obviously, many of you know about Blue UAS and kind of how that's morphed over the number of years, and whether it's needed or not. We continue down that path, have built out the framework, and continue the foundry and on-ramping process for acceptance of that. Now, the RQ-35 is fully battlefield proven, as Dr. Kathuria had mentioned, significant numbers of aircraft flying in theater, but we have to prove that here as well. So that's the process that we're undertaking. I will hand off the numbers to our CFO, Dr. Mariya Pylypiv.
Thank you, Dan. As Dr. Kathuria and Dan just walk us through the history of AIRO, I'll again stress, we've been growing rapidly, and it was all bootstrapped. We have not been getting funding from outside. So 2022, 17 million in revenue. 2023, we had 43 million in revenue, and 2024, 86 million. And it's all bootstrapped without outside capital. We did go public in June with 69 million in proceeds, including green shoe exercise. When we look into our Q2 financials for this year, our top line was 24.6 million, which is 151% increase from last year. Our net income was, gross profit margins also increased. Actually, our gross profit margins went from 59 to 61%, and was primarily due to our avionics division and our training division, where we seen more efficiency. We did see a squeeze in our drones because we gave a big discount to our recurring customer. And as Dan mentioned, our customers are departments of defense of NATO countries. We cannot publicize who they are unless they themselves publish it in news articles, which you can basically Google search RQ-35, and you can see some of them listed. Then when we look into our net income, we recorded a 5.9 positive net income for the quarter relative to the negative 5.6 last year for the same quarter. And finally, our EBITDA was 18.9 million. Let's go to the next slide. Now, then when we look into the liquidity, as I mentioned, we did have an IPO that happened in June. As of June 30th, we had 40.3 million of cash and cash equivalents on our books. During that period, we focused on repaying some of our debt. We eliminated 14 million of investor notes, and then we reduced our maturities of current debt from 27 million to 8 million, and then we wiped out 40 million of contingent consideration liabilities, which was huge. What it means for us, we really deleveraged our balance sheet to focus on execution and growth. And that's the focus for the next steps. Let's go to the next slide, please. So what is our revenue visibility? We're not giving guidance to the public right now, but we can talk about what we see. In terms of drone division, which has been the primary driven factor for our growth, and why? Because, as I mentioned earlier, we have been bootstrapped. So we had to strategically allocate where do we put the money. We have 4 divisions, but the highest growth was drones. As of 2024, we had nearly 73.4% gross profit margin in that division, so we allocated the funding and growth there. The division comprised about 86% of our revenue in 2024. Right now, we have visibility for about 200 million in bookings in progress with NATO partners. That includes existing customers that are coming back. That includes new customers that we're talking to. And by customers, I mean departments of defense. We are expanding beyond NATO. We have customers in Asia Pacific and also North America. What are the use cases? Primarily, it has been used for surveillance purposes. Our drones can do 500 plus missions, which means they're not one and done. They have not been taken out of the battlefield realm so far. There's only 2, as Dr. Couturier mentioned, that either had a battery issue or some remote issue. So they perform more than 500 missions. They have performed in GPS-denied environments. So they have very high credibility with our customers and as well as in the Ukrainian battlefield. What is the next steps for this growth besides transforming those 200 plus million in bookings in progress is obviously the expansion to US. Right now, that facilities that Dan mentioned in Phoenix, Arizona is to strategically position us for US DoD procurement. That's what we're focusing our use of proceeds, and it's very important to us to grow further. Then our next divisions is training. As was mentioned, we are one of the 8 companies that have been selected to be for next 5 years. No other companies can bid for $5.7 billion DoD contract. What it means, as contracts are coming out, we can bid on it as long as we have necessary aircrafts. So some of the usage of our funds from the IPO proceeds will be going to acquiring those aircrafts, so that we're highly qualified for 1.6 billion portion of it. And finally, our next division is avionics. We consider it our backbone of operations. It's not only dashboards. It's essentially all the avionics that you can think about, next-gen GPS systems. And we recently announced that we are providing our GPS to Joby. So we will not only be manufacturing our own eVTOL, we'll be providing it to our peers and also helping with our drone division. So we have very high visibility of our revenue stream and where we had it.
Oh, well, perfect. That was a great overview. Maybe just to kick it off at a high level, you just went public and you just had your first earnings call. I guess, what does that mean as a milestone for your growth trajectory?
So we're just going to alternate answers. I think, going public was a significant milestone, gives us a lot of credibility with our customers from NATO to the Department of Defense. And Mariya has mentioned, it gives us a lot of liquidity, but it really allows us to implement our growth strategies, opening up our U.S. manufacturing facilities and continuing our growth and implementing on our bookings in progress.
Excellent. And you've described AIRO as a purpose-built platform for aerospace and defense. I guess maybe you could talk about what that actually means in practice. Just give some more color there.
So if you take a look at it, we have battlefield-proven drones that are operational in the Ukrainian theater. There's a lot of overlap with our last mile cargo delivery drone that we announced. And as we mentioned, we're providing avionics to Joby. That also helps because we're vertically integrated to develop our own eVTOL business. And because of our top secret clearance with Coastal Defense, one of our winners of the IDIQ $5.7 billion contract, that gives us a big advantage in bidding for US DoD contracts.
And then, looking at things geographically, I guess, how does the strategy change or shift depending on the geography you're targeting?
So let me turn it over to Dan. Let him talk a little bit too.
It kind of depends on the products and service that we're talking about, but our focus, as I had mentioned earlier, has been very focused on NATO countries for our drones, our largest division and our largest revenue stream. And so that's been a huge focus. As Mariya had also mentioned, we do have customers in the APAC region as well as North America. So we continue to go to all corners of the world and showcase the drone technology. With regard to our avionics, we have 650 a dealer network of over 650 partners around the entire world who are working with us very closely on the avionics side as well as drones. So as we continue to expand globally, we have a network in place. And with regard to training, we're currently training U.S. DoD solely, but that's potentially expanding too into other areas. So the world is open to to all of our product lines.
And I guess maybe on that topic, looking at your addressable market, you mentioned 315 billion addressable market. Where do you see the most traction for that in the near term? Yeah,
I mean, for sure, the biggest part of that is in drones, our ISR drones, and we've seen considerable growth over the last few years. That changes as the years go forward, and that's why we're putting some of the investment into the middle mile cargo drone, because the eVTOL market continues to find its way. There's obviously a lack of facilities and other infrastructure that's hampering kind of that widespread growth of that at the moment. But we see that we see that as another uptick in what we're focusing on. So. But to answer your question, right now it's drones, and Mariya can talk a little bit too about the investments that we've made over the last few years in drones specifically.
Yeah, and then maybe on that, focusing specifically on the RQ-35, I guess what makes it such a compelling product for your defense customers?
I get a couple of reasons. Number one, it's an AI-enabled ISR drone that's basically launched by one person, and once it's launched, it has nearly a 3-hour flight time to do its missions. And so once it's launched, it puts the warfighter back into doing the other work that person was doing. It doesn't require somebody on joysticks to fly it. It's AI-enabled, so as it's out there doing its work, it's learning, it's communicating with the other assets in the air, and then it's also communicating directly with other strike assets to engage on targets. So one of the biggest things is just its ability to operate in a GPS-denied environment, and we all know what's going on specifically in the Ukrainian battlefield. It's spoofing. It's electronic warfare. We see videos all the time that come back from the battlefield of the Russian tanks, and they're shooting it with considerable amount of EW, and how the drones respond and how they work with each other to say, this is what's going on over in this sector, so here's how we need to operate, and that's all happening in real time. And so we have amazing feedback from the front lines, and we have weekly meetings with our front lines, so we're always getting feedback on what makes that better. It's in the software, really, the software, the radios, and obviously in the ConOps too, and how we're operating. But that's what's made it so successful in the theater.
Actually, you actually just addressed my next question. I guess what are the main takeaways thus far in Ukraine? And I guess if that conflict were to end, I guess what does that do to demand for a potential replenishment cycle?
I think obviously we'd love it to end for other reasons. The takeaways, I think, are some of the things I just talked about in how that ISR drone has served its purpose and is serving its purpose in the battlefield, providing significant intelligent information to the warfighter.
I think I'll add. So if we're talking about the war ending, right now this drone is surveillance purposes. So for us, if the war ends, we anticipate a lot of demand just for the surveillance of the border to keep the peaceful missions. The same goes for many other applications, not only for Ukrainian border, but also for our NATO partners or customers for surveillance of their own borders. Also, as we have a Phoenix facility, we anticipate, we actually in conversations with DoD for usages in US. And obviously there's another way of usage is drone as a service that we're exploring to further grow our drone portfolio proposition.
Excellent. Maybe just pivoting to the avionics segment, I guess how are you leveraging your capabilities across different platforms?
Me? I'm talking a lot up here. So I guess we look at avionics in two different ways. Number one, it's been a standalone business for 21 years, so it has a pedigree of certification prowess, of innovation. But one of the big reasons we pulled this into the portfolio is really because it serves, as Mariya originally said, as a backbone for our certification and manufacturing. So there's a true capability that's there that you don't just spool up from zero. So we're bringing 20 plus years of manufacturing capability in certified avionics, whether it's mil-spec or it's FAA certified or it's certified by a different agency around the world. We've got the pedigree there that we're bringing to the market.
I'll add a little bit more color to it. Also, as we mentioned, Aspen Avionics has multiple usages across our divisions. One of the usages for our electrical drone, we estimate that it saves us at about $500,000 per our electrical drone just to have avionics on site as our own division, as we're building up our electrical cargo drone going forward. So it's a maintenance hub inside of our AIRO group overall.
And then I just want to briefly turn to the audience if there's any questions. Otherwise, I have a few more. Yep, right here. Get a mic, please.
I was just looking at the balance sheet that you guys have up there, like on FactSet. It looked like there was a pretty substantial impairment, and maybe I was reading it wrong, but a pretty substantial impairment charge and another unusual expense there. Sorry if I missed that in the presentation. What was that exactly?
So we had impairment in 2024, goodwill impairment, specific to our training division. And as I mentioned before, our focus was, and there was two impairments, goodwill on the training and eVTOL. And it was how we strategically allocated funds, and we focused on drones. So we did not put money into our training division to acquire new aircraft, so the timing or the forecasted revenues that were to come from that shifted. And same goes for eVTOL. We shifted the timing on when they will come in production. Internally, it was, as we mentioned, it's around 2027 right now because we were allocating funding towards the drone division at that time. And that led to the impairment.
Thanks. And then I guess follow up on that. I know the drones are really the main story for you guys right now at this point, but considering the other three, what among those three would kind of excite you guys the most? What's the next part of the story after that?
So if you take a look at it, one is, we were, on a broader geopolitical environment, you saw NATO funding is going from 3% to 5%. So that allows our drone expansion. The fact that we're manufacturing in Denmark, it also makes us, from a tariff point of view, very easy. We avoid the tariffs there, and we have U.S. manufacturing. But to answer your question specifically, if you look at the eVTOL business, we've seen Joby's market cap, when we started from 4 or 5 billion to, I don't know what it is today, 13 or 14 billion. I think our eVTOL business is very well positioned because we can certify under the existing FAR regulations, and we're doing it at Transport Canada, which has reciprocal for the FIA. And we're also focusing immediately on cargo and then, passengers. As we learned from the NASA ISS CRS bid, there's an 85% overlap with cargo and, human, certification. And then I think on their training business, as Dan and Mariya pointed out, we're well positioned for $1.6 billion, of that, contract. And if you saw, there's almost 61 active conflicts going on. We saw in the Israeli-Iran conflict how important air superiority and drones are, and that's where we are positioned. Dan or Mariya, if you want to add anything else?
Well, thank you. I think we're just about out of time, but that was a great discussion and presentation, and we're excited all the things going on at AIRO, and we'd be even more excited to have you guys back next year. So thank you.
Thank you very much. Thanks, everybody.
Investors should carefully consider the investment objectives, risks, charges, and expenses of the ETF before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 800-GABELLI or visit www.gabelli.com. Risks to the ETF include a downturn in commercial air travel, production and/or supply chain disruptions, decreases in defense spending, subcontractor financial health, and competition and/or technology changes.